It is now 28 minutes past 10. We are moving along in this fifth edition of the Fund Distribution Breakfast. We are here together for the next 25 minutes for the live events. We have this final panel discussions focusing on the distribution aspects, in particular sustainable products, fund management, online platforms as well. Very interesting. Let's start with a segment of the wealth management segment. So we have Simon Colborg, General Secretary of the FESIF, European Pensions Institute, and FEPI. FEPI. Tell us about the behavior of these and tell us about the clients. Well, first of all, the advisors are best placed to know what's happening, and when it comes to having a take on the appetite for sustainable products through different distribution channels. So when we talk about the ESG fund, so what are the thoughts from the part of the clients and advisors? So our federation brings together about 20 national federations, about 30,000 members. So we ran a survey, and we got 2,000 responses, and it's interesting because advisors are telling us, yes, this is fundamental, these are fundamental, because this is what our clients want. And this is what we could hear coming from the discussions with the members. In Italy, in France, members of our federation, so there's a strong appetite from the part of our clients for ESG, and even more so keen given the current health crisis. So these advisors talk to their clients, and maybe not enough and not every time. This is what comes out of our survey. Okay, I have clients, I don't necessarily have the ways of addressing these and bringing this up on every occasion. So what that means, ESG, for these clients. It is important to, ESG, environmental, social, and governance. This is where it stands. But when we talk to the clients, European clients, 80% of them, their motivation is environment. 10% is social related, and 5% related to governance. It's quite striking because if we talk to a chief investment officer of an English-speaking pension funds or asset managers, they said 80% is governance related, 10% social, and 5% environment, because, well, they have to be into that as well. So for European sectors, this savers, this is about environment, first and foremost. This is the key driving motivation, what is not long-term, and ESG. I think environment is fundamental for a European client. Proactive approach. Now, what do you propose in terms of what do you have in sustainable funds, or is it your role, and is it a bit of both? Are there spontaneous markets? It is a spontaneous approach. Yes, it is a spontaneous. It is a virtuous approach, because the reason why members have a growing interest in ESG is because simply they act upon the demand from their clients. Don't wake up in the morning and put forward ESG funds to their clients. No, clients are in demand, and more and more, not systematically, but every time clients ask for sustainable investment. So you, as Christophe Lepitre, Chief Executive Officer of ISNES, what is take? Well, there's a strong interest in this topic. From our part, in particular in France, we have a network of advisors in wealth management, and which is quite beefed up, quite qualified. and bringing together skilled people. But what stands out with this roundtable is that there's a wealth of offering and there's not necessarily much by way of standards and expectations. And us as investors in particular, what we expect is from the part of the players in distribution is really elements that allow to sort out the offering with a very wide, within this very wide offering, standards are not quite there yet. So this is what stands out in the current offering. And support, of course, assistance, indeed. So consulting work is going to be focusing on the nature of the risks, i.e. what we refer to as extra-financial risks, indeed, and in view of investment, there's institutions or retails in pension or over long periods of time, we're talking about 5, 10, or 8 years of investment period. So such products can, you can see that out there might be disasters that do impact the financial value. Do you have this? Are people aware of this? Not quite yet. Well, there's be a duty of assistance, education. Yes, because when disaster strikes, yes, indeed, it hurts. So quite possible. Well, I say that it also depends on what we need to say sociological surveys and sociological studies and the consequence of climate risks is stronger, and this awareness is stronger amongst the younger generations than amongst a generation of people our age. And hence the acceleration of the demand. So this will happen over time. So Robert Erich Polsterer, CEO and co-founder of Pelago Investment Partners. And you in agreement, disagreement? Better maybe disagree in such a debate. Well, are we consensus? Well, I agree. So maybe I would just for you, I'm going to be contributing with additional insights. So when it comes to selecting funds, management, investment, companies will have a key role to play because there's a plethoric offering of products with very different products, very different investments. So a best-in-class approach or an exclusion-based approach can result in totally different portfolios. At the end of the day, in this plethoric offering, it is good news. We're not going to complain about the wealth of this offering. This can potentially be a conundrum to identify the most interesting funds to invest in. So it is important for management, fund management companies to explain what makes their approach different to competitive or competitors' approach. And this depends on the narrative, on the, this is what we saw on the second panel, because with the fund, there's a narrative, there's a history to it very often, and therefore it is characterized as what the investment fund is about. So the narrative, the history, the genesis of a fund is key because it often is what makes the difference between a sustainable fund with real vision and a sustainable fund that is purely marketing based, and then funds that maybe reminding base of fundamental concepts, maybe case studies or long-term approaches, because you need to bear in mind that this is a fantastic way to turn a prospect in a client, and even better, a prospect into a lead, into an ambassador. And maybe having regular reporting, allowing the investors to see how the fund performs and to really turn into realities the identified strategies. So what's key here is the history, the philosophy, the education, and the reporting. What about the appetite from part of the main categories of distributors and pension funds, wealth management, private equity, banking, the various forms on platforms? So what is the appetite? What is your take on the appetite of the main clients for sustainable funds? And this is a question that is indeed of interest. Well, the appetite. of investors for sustainable funds is real, and for several reasons. So let's mention about a few. Now, firstly, there's an awareness internationally. Let's say people would want to protect their environment, improving working conditions and life for entire populations, encouraging societies to take the right decisions. So I would say that Europe, from that point of view, is ahead of the rest of the world. Let's say that I'm currently based in Hong Kong, and I can see how Chinese companies, Chinese businesses can catch up in this respect. And secondly, the market is fed in a growing offering in sustainable products. And obviously, what does the demand do? In this case, it follows the trend, and it correlates with the supply. Third point, following international studies, and see that investing in sustainable products is not about compromising a certain level of performance, quite the opposite. When you're led to analyze a fund, one of the first indicators that you're going to be looking at is the risk-adjusted performance. Performance is key, but the path that the fund manager will take to deliver this performance is just as important. In any case, this is the fund risk and can be crystallized in many different ways: volatility of the fund, its creative value, and or the maximum drawdown. But behind this mathematics, it lies a very important mathematical functions, i.e., the knowledge of a fund. So this knowledge can be acquired via financial data and via extra financial data, as you've seen in previous panels. And this can only be crystallized if standard financial analysis can be apprehended, taking these dimensions into account. So let's talk about the pillar of governance. Pillar of governance at a relatively low point there. But this is a theme that is really growing and taking momentums, and especially for activist funds wanting to get into the capital of companies that have shifted from quite a limited governance. So if committees are brought up and with qualified people, skilled people, knowledge people, and these boards will be, if it comprises all these skills, will be taking decisions with breadth and width. Envisions if offices, for instance, are present, if they facilitate remote work, and these companies will retain their key people. So bear in mind that sustainable approach is not a concession we're making. This is a fantastic tool allowing to limit your risks or prevent risks. So, and a final point is really important to bear in mind. This appetite for sustainable products can sometimes be biased, and I'll tell you how. The teams in charge of selecting funds, likes of Natixis, BNP Paribas, Société Générale, Crédit Agricole, and the likes, feed to via an open architecture offering the offering of products such as the network banks, private banks, retail banks, as well as external clients. These fund selectors set up by list, which they will serve to all of their clients. It is, in fact, the selections of the best fund per class of assets. Now, at times it happens that these selectors have to bring down and shorten their select list, and given, for instance, profitability-related constraints. And in this context, sustainable assets will be more likely to remain in this list because they will tick more boxes. And sustainable funds can be present on a traditional fund, in a SRI or ESG offering. And so the weight of sustainable funds will increase within the buy list, and these funds will be then proposed subsequently through the networks. And these networks are a significant part of the market. Thank you very much, Michel, for these. Thank you very much, Robert, for these takes. Now, in terms of the consultants and advisors, customer-facing advisors, the reason why a saver wants to speak to an advisor is because they won't have someone in front of them, and they want to go for independent because these people will be there 10, 15 years down the line, as opposed to a bank employees that will be because of the turnover within banks. So they won't have a long-term vision. It's not 3-5 years. We're talking 15, 20 years. And so financial investment, I think in France, as we know, the lifespan of life insurance is longer than the length of a marriage. Now, that's really long-term visions, and if we want people to hold to deliver on their long-term promises, they will go to advisors, and advisors don't want to end up in a situation where 10, 15, 20 years down the line, clients will come to see them, okay, you pledged this magical product and didn't deliver. So no delta between the expectation of the customer and what the product can deliver. What is your take from a business standpoint? Now, I do believe that on this specific theme or topic within the investors that we are, as in terms of savers, well, there's a need to find a purpose, to find a meaning, this act of investing that can be within a perspective for long-term vision, protection of capital. Long-term vision needs to be supported with something else to be given more meaning. And the incoming of massive development of ESG may meet this need. A few minutes to go on the new technologies, on the online platforms and investment, sustainable investment, what is the link between the two as to this distribution channel, which in terms of using these online platforms, is it good for sustainable investment? Because there's a generational change, which we mentioned earlier. This is also an accelerator, a way to accelerate the development, the growth, no doubt, undoubtedly. But it's not obviously so obvious when you look at it more closely, because these are new products, and these are new methods because they seize the opportunity to maybe address a number of post-market related problems. And in terms of the tools used and evolutions, the recent evolution in terms of regulations in France, Luxembourg, and Europe, widely speaking, these make such these products where we've got quite an original proposal there, because it's quite a logic of short circuit between fund producers and consumers, B2B, and going forward in B2C mode. So what's interesting is these are distribution channels that are new, that are simple, that are cheaper than the current channels, and that allow as well to consider for measurement companies. We have 630 of those in France, lots of talents there, lots of original offerings, but lots of things to be put forward to the customers. Yeah, but to present these offering is not an easy exercise. Many management companies don't have the critical size, the resources to have a distribution network, to access an investors sort of pool, and in terms of the technologies as well. That's why this is only one of the platforms. The platforms you described is but one of these platforms. That's interesting. Technologies moving forward. And that allows to consider wider distribution network, less costly. So, especially internationally, if we look at how our funds are made, we are in a kind of paradoxical situation because funds are we're talking about a fully digital product. There's no perishable products. There's no cold chain, and it is a standardized product within the 27 member states of Europe. It's at the end of the day, this is homemade, and distribution is homemade as well. So it's home ground. How distribution and And production, if we look at the German funds distributed abroad, that's 2%. In Spain, 2%. Portugal, 3%. So home ground and home ground for distribution and consumption. So, and this will be a distribution factor and, well, I'd say democratization factor for a wider client base in B2B or B2B2C. Robert Erich Polster for Alpha Pelago. What is your take on this accelerating technologies for investors? And new technologies are now involved in all the levels of distributions. Training is a fundamental aspect of distribution. This is a tool to develop loyalty. With the development of digitization, you have the possibility to self-train from wherever you want with a theme of your choosing. You can do this online. That's interesting. But of course, digital training applies to all kinds of products, sustainable or not. But the very principle presupposes a sustainable economy. Training is the obvious link between new technologies and distribution. And I wanted to touch on a different link, maybe slightly less obvious, between new technologies and distribution, which is that of, well, we want to see when new technologies allow to anticipate behaviors of clients, of investors, on the basis of market configuration and software also that will determine the likelihood that clients proceed to repurchase depending on the volatility on financial markets and overall economic situation. So this will guide fund managers to anticipate their purchasing, their buying, and optimize their funds. And that will allow marketing and sales teams to coordinate, to put in place an adapted communication, and to limit potential buyback. This is an extremely powerful approach, and in terms of the markets that tend to move when they move downwards. Well, we did realize recently that in certain types of funds, certain types of assets, there's issues related to liquidities. So what does that mean? It means investors want to buy back their fund, and the fund to be bought back, and liquidity of assets does not always allow to do that. And what you said is really interesting, because this is about this necessity for a fund manager, this benefit, not part of a fund manager to have perfect knowledge of the identity of those, the bearers of their funds, the buyers of their funds. As was you said, this is about better anticipating the current situation, which could, what could happen, what could lead to a crisis for the funds. So true indeed that these new platforms bring a solution to these old problems familiar to asset managers, which is that of a partial knowledge or a poor knowledge of those who own their fund, who buy into their funds. We have a few seconds left. As it is, the CGP technologies and digital technologies, well, they should work hand in hand. It's not technology versus CGP. This is about using technologies to deliver service to the customers. So we talked about short services like local farmers. You get your local turnips and carrots in short circuit to local farmers, or do you want them to end up on your table without knowing where they come from? Okay, thank you very much to all three of you. Thank you very much to Robert Erich Polster for Alpha Pelago, Simon Pocourt for FEPI, and Christophe Lepit for ISNES. So 52 minutes past 10. We've spent the last 2 hours together. Thank you very much for joining us. So thank you very much for joining us on the occasion of the 5th edition of the Fund Distributions, and organized by, really going forward, we'll talk about a transforming industry. Thank you very much for Fund Global of this 5th edition. Thank you very much to all of you for joining us online. Thank you very much, and see you very soon indeed.